point of that is it's a big shocker.
It's a big shocker.
I shouldn't say burgeoning, exploding debt. Projections are $50 trillion in the next 3 to 5 years.
That's ridiculous.
And if you're thinking that
it's bad budgeting
won't have an effect, it will eventually have an effect.
Nobody has a crystal ball, and sometimes there's something around the corner that is totally unpredicted.
You're going to potentially run out of money. To the Wise Money Guys radio show. I'm your co-host, John Scambray, and I'm here with my partner,
Giuseppe Visconti.
And we are certified portfolio managers that specialize in helping people who are retired or about to retire manage their money. If you like our show, want to get a hold of us, have comments, want us to talk about something specific next show, want to come in for a no obligation consultation, give us a call at 916-967-3500. So this morning we're going to be talking about something that's it's sad, but it needs to be
hits
talked
home and
about.
Personal.
It does hit home and is very personal. But before we get into that, I do want to announce and mention, and I'll mention it a couple of times, that you can come see us in person. Our seminar is in 2 weeks from this last week here. So it's on March 4th and it's a seminar for people who are retired or about to retire that are concerned about, where's the country going? Where's inflation going? Where's interest rates going? Where's the cost of health insurance? Where's goods and services? Basically, how does this affect my money? How does this affect our financial lives long term? And that's what we're going to be talking about at our seminar on March 4th at Wood Creek Golf Club from 5:30 to 7. You'll call 916-967-3500 to sign up for it. We are getting a lot of early people signing up, so don't wait. We don't know. In fact, since it's our first time at this golf course, we don't know how many people it holds.
It holds quite a bit, but there is capacity for sure. So you don't want to wait till the last minute.
So nevertheless, give us a call, whether you want to come in for a no obligation consultation or sign up for our first of the year. That's right. It is our first of the year seminar. And that's going to be at Wood Creek Golf Club again from 5:30 to 7 on March 4th, which is a Wednesday. Call 916-967-3500. So if you listened last week, I was not doing the show. Giuseppe was doing it for us, flying solo. You did a good job, by the way. And the reason being is because I was at a friend's funeral. His name was Braden. He was 58 years old and was in great health. It's certainly on the outside, and just based on, what he looked like, the activities that he did. He and his wife of, 30 plus years, I think around 35 years, just all of a sudden had a stroke and ended up, with no brain activity. And 1 week later, they pulled the plug, I guess, for lack of a better, they took him off life support and he was gone. And the reason why I mentioned that is because, he wasn't expecting it. Obviously his family wasn't expecting it. His sons, both, they just married or saw their second son get married, and he's in our industry and just a great guy. I started with him. He started a little before me, but in the late 90s, I had been at another firm and then moved over to Dean Witter, which became Morgan Stanley Dean Witter, and had known him and his family for 30 plus years. And in fact, my parents were with him just before that, and and then you're no longer here. So the point of that is,
it's a big shocker.
It's a big shocker, and even for somebody as successful as he was, as successful as his family, is you got to have a plan. And I hate to tie it to that, but that's the reality.
Because you don't know, nobody has a crystal ball. And sometimes there's something around the corner that is totally unpredicted. And I shared a little bit about, my father had passed away last year. He was older, granted 71, but it was totally unexpected, and left my mom. My mom survived my dad, but the big shock is the shock itself, like your friend or my dad, because it wasn't, it's not something like somebody was sick, for example, right? Had a cancer, was battling cancer for 3 years off and on. And you're like, oh, I should start getting my ducks in a row. I should start thinking about this. I should start thinking about these finances, or, where do we have a trust set up, or all these different things, right? That we normally talk about, or maybe you've heard either through our radio show or maybe through a professional that you work with, whether it's an accountant, a lawyer, a financial advisor, but you tend to feel like, I have plenty of time. I'll push that off, and that's in the back burner. I'll do it later. But, come to find out some of the things, and even like I think you said, your friend, Braden, you weren't even sure if he had a succession plan for his business. Yeah. My mom, in her case, my parents did not have a trust, and I'm their son. And I've been in this industry for, over 17 years, and I've talked about it a bunch, but it's not like, you don't take the urgency.
Somebody to do something.
There's no urgency around it when it's not planned for, but those are the things that we talk about and bring up, when we do a financial plan with our clients and our prospect. And we don't want to make it insincere to like try and turn this and saying like, oh, this is what we do, and this is what we're trying to sell you, pitch you. No, it's just reality of life. And I think when it hits, John recently on a personal right level, I mean, we had a conversation. He's like, crap, I'm a year younger than him. Yeah. Like this could very well be me. Yeah. And I have, do I have all my ducks in a row? Cause you're not expecting a 57 or 50 or next year that your time is up. Right. My father, I remember having conversations with him of, hey, you should probably put a trust together. Hey, you should, maybe think about this, think about it. And he's like, don't worry about it. I'm going to be okay. We can do that later. I can be, and it's normal. It's common. We get a lot of it from our clients, even sometimes prospects. I know I've had clients for a number of years and have had every review meeting, annual review meeting, have talked about, hey, we talked about a trust last year in your annual review meeting. Have you gone through and done a trust? Have you put your house under a trust? Have you thought about, who your durable power of attorney is in case maybe you get a stroke? I have a really close friend of mine. His father actually had a stroke, but he survived, but he's been incapacitated, and he was incapacitated for a few months in the hospital. He was in ICU. What does his mom do? Who takes care of the finances? Who has the power of taking over the finances? Those are sort of the things that you have to think about, and that all ties with the financial planning. Yeah,
it is important to tie it to financial planning. And again, that's what we do. But nowadays, if the advisory firm or the advisors you're working with aren't financial planning based, don't talk about estate planning or the what ifs. Don't talk about, things as simple as insurance. Even though we don't sell insurance, it's still important to have that be.
We have the capacity to sell insurance. We're just not huge insurance and big ticket, one hit wonder commission salesman. But insurance does play an important role, unless you're self-insured. And we can talk more about what that means.
Well, again, the reality is that the person that you're getting financial advice, they need to look at a broad brush, at least initially, of topics and concerns, and then narrow it down to the things that need to be done, most urgently, things that can be put off a little bit later, but really it all starts with basically having that consultation and conversation with your financial advisor, and if you're not,
and your loved ones, really, and your family.
Well, hopefully when you do your plan and all of that, you're bringing in your, it's you and your spouse together.
Well, it's that, and it's having the conversation with your spouse, right? Or significant other, or your kids, and having those conversations and not only that, but then you're trusted. I mean, I have my cousin who reached out to me, I think a number of months ago saying, hey, I want to know if it's okay, should something happen to me, that you're the executor to handle the trust and all the finances, for my family. Those are the things that are uncomfortable to talk about, but it's necessary, because if those things aren't lined up and not talked about and planned for, that is the last thing that you want to do when you're grieving, a loss.
Yeah.
Is having this pile of paperwork and all these to-do lists and tasks. It's already overwhelming as it is, just grieving for the loss.
And not to make light of the topic, but there is that insurance commercial. I don't know if you've seen it. It's not intended to be humorous by any stretch, but it's
ethos.
It's one of those, and it's a husband and wife having a conversation, and the husband mentions that some friend died unexpectedly and didn't have insurance. And then the spouse goes to the husband, John, and his name happens to be John in the commercial. We have insurance, right? Yeah. And he goes, and the husband basically goes, I've been meaning to get it. And she goes, John, we don't have life insurance.
Right.
So again, life insurance isn't, what we specialize in. As Giuseppe said, it's possible, but we would refer it to experts. If we uncovered in the conversation that, insurance is something that you don't have, is out of date, so on and so forth. Just like we can cover, looking at trusts and getting those reviews and helping you and point you in the right direction for getting those things amended, or in fact, helping you to get them put in place if you don't have, a basic family living trust. So call us at 916-967-3500. Stay tuned. You're listening to the Wise Money Guys. We'll be right back. To the Wise Money Guys radio show. I'm your co-host, John Scambria. I'm here with my partner, Giuseppe Viscani. And we were talking about the importance of financial planning with respect to being prepared for the unexpected. So if you're just tuning in, both Giuseppe and I have had some recent friends and more drastically in his case, family pass unexpectedly. And it does tie to your investment goals and objectives that should all be in your financial plan. And when we do a financial plan or have a financial planning consultation, which, by the way, we do that with no obligation, we're going to talk about those things. And I know they're uncomfortable, but it's important,
it's important to go beyond just the portfolio and investments and just the performance of like, hey, my portfolio did this last year. What is it going to do next year? It's beyond the scope of that.
Yeah, it really is. And in fact, I'm thinking we should get Alex on the trust side,
Alessandro
back on the show to talk more about trusts and some of the protection basics that trusts afford families that are high net worth, and then
tax mitigation too.
Yeah, the tax mitigation strategies, and then also just what a basic financial a basic trust does for you, which is sometimes just simply wanting to make sure that, again, as you said, when you're grieving, the last thing you want to worry about is my beneficiaries or are going to have to deal with probate and all the assets. Things.
Yeah. I mean, if luckily when my father passed, luckily my mother survived him, but had something happen to my mom at the same time and they both passed, they didn't have a trust. It would have been a financial mess for me and my sister to handle. Luckily I have enough experience so I would know where to go, but it would have been a lot of work. It's been quite a bit of work actually with me helping my mom get things more organized, get a trust put in place for her, have her, her property put under and recorded under the name of her trust. Also, it's basically your playbook. We're not estate attorneys, but we've dealt with this enough and had enough experiences with clients, and unfortunately enough experience with clients and spouses of those clients passing away, that we have to go in and become basically the organizers and say, okay, do you have a trust? Yes or no? What happens is when somebody does have a trust, I mean, I don't know about you, but it's like this sigh of relief almost, because that essentially is the playbook.
When they do get one.
Yes. Well, when the event happens, right. When somebody does pass and say, oh, my husband passed, unfortunately. All right. Do you have a trust? If they have a trust, it goes a lot smoother, because that is a playbook, because everything's spelled out, how the assets are supposed to be distributed, spread out. If there's different kids, even my mom, me and my sister had a conversation with my mom of, her wishes when she passes away. What happens if she is incapacitated? She goes in a coma. Who takes over? Who has authority on which accounts to be able to make sure that her taxes are taken care of, her bills are paid, so on and so forth. What should happen to the house? Do you want your house to be sold? Some of our clients say, hey, I have multiple homes and I don't want these to go to my kids and just sell them all right away, or these different assets. I want some of them they could be sold, but the others, I want them to continue to be managed. There's a process and things that we can implore to have that. Basically, it's managing your assets from your grave to carry out.
Oh, go ahead. I was just going to say, what the biggest mistake is that we see over and over again when it comes to trust? Not that our clients don't have them, because usually they do. Our higher net worth clients have them, but then they don't have their accounts actually named in the trust. Yeah. Or they haven't even recorded their properties.
Sometimes they don't understand the name
of the trust.
A lot of times they don't understand that. I think a lot of times what happens is, what I've come across, and probably you too, is that they've done the trust, and so therefore it takes care of everything. Yeah. Or they've listed their accounts like, oh, I have accounts at Bank of America. I have an account over here. I have an account at Fidelity. I have an account with you guys, with Schwab. And they've written it down on the back of their trust. No, that does not mean that it's under the trust. You have to actually, if you have a brokerage account, a taxable. Now, all retirement accounts and insurance, life insurance, annuities,
they don't have a trust named.
You don't need it, because they already have a beneficiary listed. It's protected from probate. But your savings accounts, your properties, your taxable, non-qualified is what they're called, investment accounts or bank accounts, or any assets that you have cash in, those you want to go to the entity itself. For example, I took my mom to U.S. Bank. She's got a couple banks, and I took her to both banks, brought in a copy of trust. They have their own respective paperwork. And then we're able to put her account, instead of saying her name, or at the time it was her and my father as a joint, changed it to under the name of the trust. Same thing with the house. Went through the county and had her property recorded under the name of the trust.
Bare minimum, if you don't know, and maybe you just don't want to have a trust done. I know, we have some family members that the exact comment from this particular family member was, what do I care when I'm gone?
You don't have anybody to leave it to.
Well, no, they have people to leave it to, but just doesn't care about what happens after they're gone. But bare minimum, one of the simplest things you could do if you have accounts is you can add a beneficiary even to a taxable regular account, like an individual account or a joint account. You could add a designated beneficiary account. In fact, some firms call them TOD accounts, transfer on death. Other firms call them designated beneficiary account. So, that's something that, again, when you're working with us and we're doing your plan and we're managing your investments, we're going to make sure they're titled in the best way possible for you and your family and your legacy. And those things, often are overlooked or underappreciated And then certainly, as I said, the type of advisor or advisory firm you are with, in my opinion, if these aren't the types of conversations you're having, and it's just about, oh, here's my portfolio and what return did it get me, you're missing out.
Right.
And I think you're being underserved and not getting the value that you should be getting out of the firm that is representing you. And I think the wave of the future is really advisors that help, and we do help with, helping you find the right people to help you with your tax returns. We help on tax mitigation ideas and strategies, helping you get to the right folks for, your estate planning needs, the trust actual, documents and putting those into place. In fact, we've had Alessandro on the call before, and we'll have him, on the show, and we'll have him again. But again, these are all the things that we can talk about in a consultation, and there is absolutely no obligation for that consultation. Of course, reviewing your investment portfolios and giving you some ideas and letting you know how we would do things differently and how that might be better for you is going to be part of that conversation. And if you're not ready to do that, and want to come to a free dinner workshop, our first of the year, you can call 916-967-3500 and sign up for our March 4th dinner workshop at Wood Creek Golf Club
in Roseville
from 5:30 to 7. Space is filling up, so don't wait. And who should attend? Well, somebody who has concerns about their investments, their estate, their legacy, people where, your financial lives matter, people that have, concerns about their portfolios and everything that's going on. In fact, we'll talk about in our next conversation, the government shutdown, inflation, the economy, the markets in general, and always we will give you tips and ideas on how we're doing things and why we think that's the right process. So stay tuned. You're listening to the Wise Money Guys, John Scambray and Giuseppe Viscani. We'll be right back. To the Wise Money Guys radio show. I'm your co-host, John Scambray. I'm here with my partner,
Giuseppe Visconti.
And as always, we like to also talk about things that are going on that affect investment and your portfolios potentially. And here we are again. We're getting to be a broken record on these things, but the government shutdown just continues to be a conversation. I think even if we get back past this partial shutdown, it'll happen again. They're just,
they're in recess until the 23rd.
And that's a good point. I don't know what politicians, quite frankly, do anymore for the most part, as far as Congress and laws and making our economy and our country better and safer and more prosperous. I think they spend more time just fighting each other than
trying to stick their ground and
battling the biggest issue of all, which could drastically.
They're battling the debate, right?
Yeah,
and debate to debate and trying to stick to their sides and have an important debate on that more so than what's going to be, best for the citizens of our country that we represent.
None of the politicians seem to care about the burgeoning debt. I shouldn't say burgeoning, exploding debt. now, projections are $50 trillion in the next 3 to 5 years.
That's ridiculous.
Just 2 years ago when you joined the show, we were in probably the mid to high 20s,
right,
in trillions,
and now we're approaching 40,
and now we're right there at 40 trillion. So 50 trillion, 100 trillion. Where does it end? And if you're thinking that
it's bad budgeting,
that it won't have an effect. It will eventually have an effect. Why? Because the value of the dollar against other currencies will be so low that prices will be drastically higher because your purchasing power is drastically lower. And then how does that affect your portfolio? It affects it drastically. Because if we take the dollar right now, we're not going to use scientific methods of comparison right now. But if it goes down 50% from where it is right now, as far as, marking it to the yen or the yuan or the euro,
we'll have a lot of tourists from Europe and UK and coming over, right? Because it'd be cheap.
Everybody would be coming here. But again, our buying power to maintain your lifestyle will cost you drastically more. So once again, it comes back to, are you prepared for that? If you don't have a baseline inflation rate of at least 2.5%, in your plan that your portfolio has to keep up with, plus fees, you're going to potentially run out of money. You might be thinking, we're 65 years old. We're getting some Social Security. We have $1 million. We have no debt. And that $1 million is going to last us forever. And we're going to keep doing our travel and buying our groceries and going out to the meals we like to go out to and so on and so forth. Well, guess what? 10 years from now, that $1 million.
Everything's just got more expensive. I mean, I just had I had a painter at my house paint
this blew me away.
Paint both of my girls' rooms. And, and I'm pretty,
you're frugal. You're frugal. Let's just admit it.
Well, no.
What you want your advisor to be, though, too, right?
But I try and look, I just go out and just like the first guy that comes by and just gives a quote. I mean, I've had 4 people give me quotes just because it's like, wow, the hour, the per rate hour is just insane. I mean, some of the quotes. Well, painting and some woodwork, right? Some like, I forget what you call it.
Woodwork is more skilled labor. I don't think painting is skilled labor.
Yeah.
I apologize to any painters listening, but.
Well, I can't paint like he painted.
You can't, but painting for $100 an hour.
His lines were, yes, exactly. Yeah. That's the point. And so I found a reasonable one for an hourly rate and he did a great job. But it ended up being a little more than I anticipated because he just charged by the hour. Some of the other guys that I got, they charged by the job. But the ones that charged, a couple of them that charged by the job, when I broke it down and asked them like, how long is it going to take and so on and so forth, it broke down to about $200 per hour was the hourly rate just for the labor, not including the materials itself. And I just have a hard time, unless you have a PhD in painting. But point made,
which stands for piled high and deeper.
Like you better be Bob Ross and I should have a happy little tree on my wall. Right. And then I'm like, okay, I'll pay $200. Yeah. I'll pay $200 an hour for that. Right. But just to paint a color and maybe another color on another, like two-tone and some chair rail and what have you. Nevertheless, it got done. But my point is even with me and trying to find a reasonable deal out there or reasonable work as far as quality work for reasonable rate, it still is way more. So I'll just tell you, two bedrooms, both two-tone or 2 colors of paint, right? Two different types of color of paint, chair rail in one, and then some board and batten. I don't even know if that's how you call it.
Board and batten.
Yeah, but he did mud work and everything
on the outside of a house typically, but.
Yeah, so it's in the inside with woodwork, and so it's
Wayne's.
It was a lot longer process with that. Did a really, really good job, but it cost me $4,000. Okay, rewind time. I know this is a while ago, but I had a rental property I bought in 2019. Okay, a house, a single family residence with vaulted ceilings, skylights. Right, I had the walls painted one color, the ceiling painted white. I had all the trim painted. I had, the doors, the moldings, all that stuff done. And it took them a couple weeks for $1,900.
Yeah.
$1,900.
Yeah. I mean, and the reality is that we could see another leg up in prices again, based on debt and deficit. And it's again, it's almost straight math. For every $1 trillion of debt we take on, you see the value of the dollar shrink by a proportional amount. Again, is this an exact measurement? No, but the worse and the higher risk our country becomes from a credit quality, from an investability type measure on treasuries and other government type bonds, the higher the prices of things are going to go, because it's just simple. I mean, nobody's going to want our treasuries to help, print more money and keep paying for all these things.
Well,
so in order to
if we don't budget,
risk,
and if the debt continues to go higher, then our credit rating of a country is going to continue to be compromised. And then that's going to increase the rate of the treasury, because it's becoming viewed as more of a riskier asset.
Exactly right. And then when the payment on that debt at those interest rates goes even higher, guess what happens? Taxes will have to go higher. And so it's a domino effect. And so your financial planning and your preparedness for high inflation, is so crucial. Again, $1 million used to be
stress testing it. I mean, I just did this with a client in a review, and we had this conversation, and he says, here's some of the things he's worried about. His concerns is, what if inflation continues to go up and cost of everything goes up, and so on and so forth. So I said, okay, let's take your plan. You're ahead of the game. You're at like 91% probability of success, which is a great probability of success to achieve all of his goals until he's 94 years old. But so I stress tested. I created a separate scenario and said, okay, let's use this scenario, but we're going to increase the rate of inflation from here on out and see how it stresses your overall plan.
Increase it to from 2.5 to what?
I increased it to 2.5 to 3.
Yep.
And he still was
that little bit.
And he still was fine. But we did this exercise with another client or prospect, actually, right? Because they thought, what if I just put my money in a S&P index fund that tracks the S&P 500? It's done very, very well. And I'll just pull a little bit less out than the average return of the S&P 500. And we gave him a couple different scenarios. He actually ran out of money had he started in 2006, because you had 2008 that happened. But then we also ran a different scenario and says, okay, what if we just increase the inflation by 0.5%? It lowered his probability of success to less than where we wanted to, because if it's less than 75%, then we start having some concerns. And I think it brought him to like 60 percentile or something like that. Just 0.5% of inflation, because you got to think it's compounded over the course of retirement, which could be 20 or 30 years. So maybe in the very beginning years, like, my first 3 years or 5 years of retirement, not going to have much of an impact. But if it continues on and the rate of inflation stays around there and it's higher and higher for 10, 15, 20, 30 years, it has impact.
Yeah. I mean, it used to be, the reality was, if I could get a 3-4% return on my 7-figure
withdrawal rate
investment portfolio and withdrawal rate.
Right.
And if I kept at least that number and higher, then I wouldn't run out of principal,
or have to reduce your lifestyle,
or exactly. But now I think unless you're, really planning for a 6, 7, 8% return during retirement and getting to the amount of assets that will replace the income for, like you said, till age 94 or 92, 90 really at a minimum, but we like to go to 92 for men and 94 for women.
Yeah, the default in the plan is that. Sometimes some of our clients laugh, I'm not going to last that long, but we like to err on the conservative side and say, what if you do? Right? What if you do?
Yeah. I mean, again, technology hopefully is changing enough that we'll keep living longer and longer.
Everybody will just have an AI chip in them. It'll enhance, like if your cholesterol is 230, it's like bleep, bleep, bleep. It'll just reduce it to 190.
All right. We'll be right back. You're listening to the Wise Money Guys, John Scamber and Giuseppe Viscani. We'll be right back. Wise Money Guys radio show. I'm your co-host, John Scamber. I'm here with Giuseppe Viscani, my partner, and we just jumped right into a conversation today, and I failed to mention that the Wise Money Guys are brought to you by OneSource Wealth Management, SEC number 319078. For more information, you can always visit our website, wisemoneyguys.com. You can scroll down to the bottom of the page for important disclosures, but there's also great content within the page, and tools, many pages,
calculators,
news. We have a newsletter and videos just about on every type of investing topic that you can think of. There's literally dozens and dozens and dozens of articles and videos and content. If you want to just explore, get a little more information before you decide to give us a call at 916-967-3500. And again, don't forget, if you're, near retirement or already retired, come to our workshop from 5:30 to 7 at Wood Creek Golf Club in Roseville on Wednesday, March 4th. Call us again to get registered for that, RSVP for it at 916-967-3500. And let's talk a little bit about just, this year. I think it's going the way we thought it would be going. As far as we knew there would be volatility. We think it's going to be a good year overall, but not without, some scary peaks and valleys.
I don't think it's, I think it would be too high of an expectation to think it's going to be as good as last 2020, especially 2023, 2024, 2025.
3 years in a row. Think about that.
Double-digit returns.
Last
year we had a pretty big drawdown in April, but it was short-lived. But yeah, the S&P 500 had healthy double-digit returns in 23, 24, and 25. So to expect that we're going to have another healthy double-digit return this year without volatility. Can have a double-digit return? Yes. But as we've talked about in some previous recent episodes, the market on what is giving those returns is looking different now than what it has in the past few years. And so, it's paying attention of where you need to shift and rebalance your assets within your portfolio, because some of the winners in the last few years are not the winners so far this year, because it's broadening out into other areas and different sectors of the market.
Well, and if you look at the Mag 7 here, just over the course of the last year,
Mag 7, when is that going to die?
I know, but
I'm going to get some wheels for my car.
Are down.
I'm going to get some wheels for my car. It's going to say Mag 7, and they're going to be 7-spoke rims.
But most of them are down double digits, from their highs. And so that we're already seeing that shift out of
exhaustion. It's exhaustion, really.
It is. And
they've gone up so much in a relatively short period of time that they've reached an exhaustive point. And now it's more of, like we've said before, where does the rubber meets the road as far as all of this AI euphoria and investing?
That's all spending.
Future. Yeah.
It's not profit.
Right.
It's all spending
for future potential, profits and growth. And now as we're well into it, it's okay, let's start seeing how those profits are turning out. And do they turn out as fast as we think? And then can all of this AI and AI investing be supported by our infrastructure?
Yeah. Reality is that I think if you try to narrow your scope, so meaning, diversification comes from not only what type of sectors you're in within the stock market, but it also comes from being in other investment types outside of the stock market. And the focus was so narrow in that period of time, 23, 24, 25, to, chip makers, software companies, communication companies. Now it's getting back to, at least within the stock market category of investing, you're seeing much better upside opportunities along with great dividends in healthcare, pharma, industrials, materials.
Your favorite one. You missed your favorite one.
I was going there. Energy.
There you go.
And I just love that, the industry, especially the shows out there, the television financial shows were late to the game. I mean, I've been saying and talking about the importance of dividends and interest, true diversification into other categories of investment to find, risk for the best possible reward, and balancing that out through the use of looking for things that pay you while you're in them, dividends and interest, versus just going for appreciation of price growth. And now all of a sudden you see all these shows, articles going, oh, look for dividends, look for interest, look for, other sectors, and so on and so forth.
It's always been, one versus the other, and where is the total return to go after, or where is it right now, right? And so after the .com bust of 2000, value actually superseded growth, and that was the area to be in until inflation and things started to pop up, and then it was growth, and then we had 2008 happen, and interest rates were at 0, and so growth was the name of the game for a long period of time. And some of that had to do with, the interest rate environment and low inflationary environment that we're in, right? We had 2020, which then reset it, right? We started raising interest rates from 2015 and then paused it in 2019. And then in 2020, we had COVID, and they dropped it all the way down to the Feds dropped all the way down to 0. And inflation was very, very low until it wasn't, because of all the spending that they did. Right. But it created an environment. And then now you have some of the new technology, the new, I always want to say revolution, but it's
industrial revolution. Yeah. It is.
I guess you can call it that.
The fourth industrial revolution is what it was. The last one was the internet.
Not the fourth kind.
No, that's a scary movie, by the way.
Oh my goodness.
If you want
to hear a funny story real quick?
Aliens are a great thing. Watch that movie.
So here's a quick 30 seconds funny story. So I like watching some of those movies sometimes just for entertainment. I have a good buddy of mine. He's like, oh, I love that stuff. So I told him, have you watched The Fourth Kind? Yeah. And he's like, no. So I was like, you got to watch it. And put it off. Finally, he watched it. He says all the family was in bed. He watched it. He was in the family room by himself. Right. And he's like, holy cow. He says, but here's the kicker. He says, it was about midnight. The movie ended. I turned my TV off. I'm already kind of in my head, right? Like, oh my gosh. He says, but then I started walking out, shut everything down. The TV turned on by itself. And he looked at it like, what the heck? He went and he turned it back off. And like 10 seconds later, it turned back on again. He's like, I could not sleep for like 2 to 3 hours.
Hey, the thing is even presidents believe, I don't know if you saw that Obama was talking about that, he thinks there's alien life, outside of Earth.
Yeah. Well, they all know more than we know.
Yeah.
So,
but
of what they've researched or found out or whatever, but
and how we got on that, I have no idea, but
you said the fourth revolution.
Oh, right.
I said the fourth kind, but yeah. So the euphoria of the new technology and revolution of what's to be had, help to bolster and go back into growth again, right? And growth names. So now it's changing, and end of last year and so far the beginning of this year, value's back at play. Let's see if it continues on.
But I don't think dividends, making sure
especially
you
retirement.
have dividends and interest in retirement ever goes out of favor, right? I don't think there's ever a time if you've got all the money you're actually going to earn,
retirement,
from retirement, that you go, let me go purely for growth.
If you're younger and you got 10, 15 years before retirement, you're probably still going after growth names.
And you know what the best part about the plan is, or having a plan, is it really aligns your expectations for the rate of return you need to make, what the portfolio design should be, and therefore what type of return that portfolio would typically produce for you, and then how that would help you sustain your life for the next 20, 30 years in retirement. And to learn more about that and to see us in person, you can call 916-967-3500 to register for our Wednesday, March 4th seminar, or give us a call to come in for a no obligation consultation and portfolio and financial planning review. Hope you enjoyed listening to the Wise Money Guys, John Scambray and Giuseppe Viscani. Have a wonderful Saturday afternoon, and come back and listen to us next weekend. Bye all.
Have a great weekend.